In today's Eye on Money, stock markets got a major boost from the promising COVID vaccine news and the prospect of divided government in Washington. The Dow soared more than 800 points yesterday, or nearly 3%, to its highest close since February. Pfizer's stock surged more than 7.5%. Wish I had some of that. The pharmaceutical giant and its German partner BioNTech said their experimental COVID vaccine is more than 90% effective. CBS News business analyst Jill Schlesinger joins us now. Jill, is the market reaction premature, do you think, considering that this vaccine is still a ways off?
Well, I think that investors are really looking past the exact timing of when this will be widely adopted and accepted as a vaccine, because really it doesn't matter to them whether it's 3 months or 6 months. It really matters that there's optimism that consumers and businesses will get back to their usual ways of spending. I think that that reaction on the Pfizer stock may have been a little overdone. I mean, this is a massive company. One vaccine is not going to change its fortunes by 7.5 or even 8%. But again, many times markets overreact to both the upside and the downside.
How much do the election results factor into the market surge, Jill?
You know, last week we had a huge week for stocks. In fact, it was the best election week since 1932. Sentiment really became very happy with the idea of a Democratic president, a Republican-controlled Senate, a Democratic House, because the idea here would be, well, a Biden presidency with the split chambers would not be able to enact new taxes on either corporations or the wealthiest 2% of Americans. It would not be able to do a huge spending bill like a Green New Deal, and probably would have a somewhat steadier, less mercurial hand when it comes to the China trade policy.
So what if about 55% of Americans, according to a Gallup poll, I think, are invested in the market? What would you tell people to do right now?
Remember way back when, in March, where you were pulling your hair out, freaking out that markets were plunging? And at that time, I came on and I said, please do nothing. I am asking you to do the exact same thing, to really tamp down those emotions. Here's what we have learned since March. It is very difficult to predict the short-term movements of markets. Market timing does not work. Time in the market does work. Don't worry about the next 4 days, the next 4 weeks, the next 4 years. You are a long-term investor. You are investing for decades in the future. So stick to your game plan.
You got to keep cool. So where do you think the economy stands now relative to the pandemic? How much pressure is the pandemic still putting on this economy?
I think we're still under pressure, but the data have been good. We have recouped about 2/3 of the economic losses that we saw back in March and April, and that's great news. And when we look at March and April time horizon, remember there were 22 million jobs just vanished. We've gotten back more than half of those. And here's the but, unfortunately. We still have an economy that's about 3.5% smaller than it was at the end of last year, and we still have about 10 million fewer jobs than we had before the pandemic. So there is still a critical need to focus on the economy, to control the virus, and allow the economy to get back to its better self.
We haven't gotten a new injection of stimulus money. Jill, do you think that is something we really still need?
I think we absolutely need it. You know, when I speak to economists, they say we're in this very strange in-between period. Right now, as I said, the economy has been improving. But think about it. The surge of virus, it is absolutely apparent that that is causing consumers and businesses to pull back a little bit. We have municipalities that are clamping down on some of their reopening efforts. And so the time between right now and the time between this vaccine could be widely available and adopted is critical. People will need help. We know that individuals will need help, helping them getting through this period with extra unemployment, with extended benefits, with relief from eviction potential and foreclosures. This is really something that's terribly important. You know, just recently, Goldman Sachs actually put out a note that said more than half of small business owners are not paying themselves, and 4 in 10 have said they've already started laying off people because they cannot get their businesses back to their previous conditions fast enough.
It's been a real struggle. All right, Jill Schlesinger, thank you, Jill.